Hello, how are you, friends, students, and everyone who is watching this video? Hopefully, all of you are good and working on your studies. In our last video of audit and assurance, we discussed about what is an audit and assurance and who is an external auditor, what are the big four external audit firms audit firms in the world. So these things that we discussed in our previous video, if you what is the independence means and how an auditor can provide an independent view over the financial statements of a company. These were the slides that we covered in our last video. Today we are going to learn about the company structure, and we will learn who is the basically the owner of the company, who's basically running the company, and who's basically examining or verifying the accounts of the company. So let's start with this video. First of all, if you haven't watched my last video, kindly go and watch my that video on my YouTube channel. Okay, so let's start. So company structure. First of all, you should know that shareholders are the owners of the company. Shareholders basically are the primary owners of the company. When you go in stock exchange and purchase shares of some of the company, for example, if in Pakistan we talk about, you are going and purchase shares of UBL, United Bank Limited. So you will become the owner or the shareholder of the company, right? And in return, what share you will can provide you in the form of profits. They can provide you the dividends out of their retained earnings. So shareholders are basically the owners of the company. Like I have written here, shareholders are the owners of the company. Then what they do, they hire directors in the form of management to run their company, because they are investing. They are investing in the capital in the company, so that directors can run on their behalf. Are you getting my point? So which you called in balance sheet as equity, right? So owners of the company are shareholder, and the people those are running the company are basically the directors. Directors can be EDs, executive directors, and non-executive directors. We are not going into that discussion right now. We are just focusing towards the external auditor, right? So as directors are running on behalf of the shareholders, and shareholders are investing in the company, so there should be some examination as well. There should be some verification as well, whether the management or the directors are utilizing their capital in a proper way or in their desired way, how the shareholders want it. So they hire or they appoint external auditors to examine the work of directors. Like I have written here, shareholders appoint external auditors to examine the work of directors or to get an independent opinion over the financial of the company, or to get their true and fair view. The right word is true and fair view over the financial statements of the company. So they hire external auditors because they are external and out of the company. So their independency, sorry, independent. They would be more independent, right? They would be more independent because they are not the part of the company, or they will be more provide. They can provide more prudent or neutral view over the financial statements of the company. That is why they hire external auditors, not internal auditors, because normally internal auditors are the part of the management. We are not again going into that discussion why the internal auditors are the part of the company, and that is a separate discussion, right? So in last shareholder received dividends, I have already discussed that earlier in the video, that shareholder received dividends out of the retaining of the company, that you must have studied in your financial reporting papers. So this was the a little bit of about company structure and how the company normally be run. Next in the video is classification of auditors. Like I said, auditors are of two types. Normally, external auditors, like I have discussed, that shareholders appoint external auditors to get an independent or to a fair view over the financial of the company. But the internal auditors are also there. they have also some role. Normally, management hire internal auditors, and their more focus is towards the controls of the company, towards the process flows of the company, towards the like I said, controls of the company, right? So they are more focused towards control of the company. And external auditors, if we compare, that external auditors are more focused toward the financial statements or the numbers of the company, financial performance, financial position, means they are more towards the uh, numbers of the company in the form of balance sheet, income statement, cash flow, statement, changes in equity, and notes to the accounts. So external auditors can be internal or external both. External auditors are appointed by the shareholders in annual general meeting. What is that? We will discuss later. Obviously, most of you should know about what is an annual general meeting. It normally happens after the year end, after 2 to 3 months of the year end. So that is an annual general meeting. So next is internal audit are the part of the management of the company, right? One more thing that I want to discuss here, that internal auditors independence is not that much of external auditors. Obviously, because the auditor is external auditor is external to the company, outside the company. So their independence would be more, and they would can provide more prudent and independent opinion, right? Whereas the internal auditors are obviously the part of the management, they might have a soft corner with the company as well, so they might compromise their independence as well. So, like I discussed, that internal audit more towards the controls, and external audit more towards their financial statements. So, this would be my video regarding this classification of auditors and company structure. Hopefully, you liked it. Kindly watch my next video. It is more interesting, and we'll discuss about the procedure of the external auditors. Thank you so much. Goodbye.